Welcome to Fun with Annuities, where every single week I welcome a celebrity guest expert that can help you maximize Chapter 2 of your life. Listen, learn, laugh, and love every minute of the most unique financial podcast on the planet. Let's get to it. Welcome to Fun with Annuities. I'm your host, Stan, the Annuity Man, America's annuity agent. And yes, I am licensed in all 50 states. We have a repeat guest because he is the best. And that did rhyme. When the Annuity Man has clients or prospects or people that contact us for long-term care expertise, we send them to one person. We've sent them to one person for decades. And that one person is named Jack Lenenberg. He runs a company called Long-Term Care LTC Partner. So it's www.LTC Partner. That's singular, not partners. So www.ltcpartner.com. And Jack Lenenberg is a unique unicorn of a person. Not only is he a good guy, and he's a very honorable person, but which is hard to find sometimes in the long-term care field. But he also has a background. He has JDs. For those in the hinterlands and where I'm from in North Carolina, that means he actually has a law degree. Not that he uses it and he's a lawyer, but it helps because these contracts can be a little cumbersome, but he simplifies things just like I do, which is the reason we get along. Without further ado, welcome back to Fun with Annuities, Jack Lenenberg.
It's great to be here, Stan.
Excellent. So
thank you.
We've gone through a lot. We don't want to mention dates or anything to date us on these things, but because long-term care is a solution, it's a transfer risk solution, just like lifetime income or legacy or principal protection. But as people know, I have an acronym called PIL, and that's what annuities can solve for: principal protection, income for life, legacy, and long-term care. But the long-term care part of it is for that part is for people that can't qualify for the products out there for long-term care, which is where Jack comes in. He's not affiliated with the Annuity Man whatsoever. He just runs his own company. Jack, fill us in on what's new and what you're seeing happening in the space right now.
Well, I guess in the last 3 or 4 years, since COVID, there's been a big push in the space to try to make long-term care insurance benefits at claim time, to make the process easier, to make the benefits flexible, to allow family members to possibly be caregivers, if people want to stay at home and if there's a spouse, and, to at least be able to draw out benefits without necessarily having to pay for care with a caregiver coming into the home. So there was a big move in the past few years for what we call cash indemnity benefits, which eliminates the need to submit receipts. So
explain the word indemnity, Mr. Lawyer.
Well, indemnity means, you're being given and being indemnified, for the benefit that you paid for, right? And it's cash, so there's no questions asked.
Okay.
And so you're not being reimbursed. You receive the benefit in cash. You don't have to prove that you paid out of pocket.
Good.
You're getting what you paid. You're getting what you paid for.
Yeah.
Right.
I just like breaking it down because we would have, if I was buying, as much as I've been in the business, I would say, okay, give me the English version of indemnification. And I think you did a pretty good job there. So continue.
Yeah. So we've seen a big move in the industry, for cash indemnity benefits. And there's been a few underwriters that have still kind of held back on wanting to move in that direction because it's more costly for the insurance company, of course, if they have to pay in cash without someone actually having to pay for care. And they also, they'll tell us that they think there could be fraud as well.
Mm-hmm.
I don't buy that per se. So we've seen a move, but one of the more popular products that's been in the marketplace, which gives lifetime unlimited benefits, no end, where you can have coverage for your entire life, they've always resisted giving any cash indemnity benefits in its plan whatsoever. They just feel we're giving you unlimited coverage. We can't give cash as well. Way too much risk.
Right.
I get it. 2 weeks from now, they're introducing a new policy. They're actually going to be having a cash indemnity component with the lifetime benefit period.
So let's stop here, because I don't know where my marketing people, I give them this recording and then it magically appears on the internet. So let's talk. It's what the date he's really talking about. If you're listening to this later in life or right now, is really October of 2024, November 2024, correct?
October 21st,
Okay,
2004.
2024. So if you're hearing this, hold on to that date because that's what he's talking about. And correct me if I'm wrong, but the long-term care space doesn't always have a lot of new stuff coming down the pike, right?
It's not. Pricing changes, but the policies tend to be the same old, right? So
So
this
let's
is
go over, before you go to the new, let's tease him a little bit. Once again, I'm talking to Jack Lenenberg. He is the owner, CEO of LTCpartner.com. He's national. He has the same business model as we do at the Annuity Man, which is he doesn't have any favorite carriers. He just quotes all carriers to get the best deal for your specific situation and then gives you enough information on your terms and your time frame with no pressure to make an informed decision. Sound familiar? Yes, because that's exactly how we do it. That's exactly how it should be done. So go over before we get to the new one, the new strategy. Explain the three primary types of long-term care coverage that's offered and that has been offered forever.
oh, first and foremost, the old school traditional long-term care insurance policy,
Right.
which most people have heard about. Um, you buy a benefit amount to pay for caregiving, whether you're in your own home or whether you're in assisted living or a nursing home. You pay a premium each month or annually for your entire life. If you need care, you receive benefits.
And this is
Ever
the
need
hardest
care?
one to get, right, Jack? You have to go through some serious underwriting. Am I right?
Serious underwriting usually takes about 4 to 6 weeks.
Got it.
And yes, and you pay a premium forever. The rates are not guaranteed, which is what consumers don't like about standalone long-term care insurance. The company can actually change your rates. And you
And
pay a
and
premium
they
for life.
have, and they have. The other thing that I want to point out is that a lot of people think that this is the only type. Money goes poof. I'd never buy that because money goes poof. Kind of like when people think there's only one annuity and money goes poof when you die. This is one of many types. So that's the traditional old school. This is the kind my mom has. But talk about the other types as well.
Right. So in the last 10, 15 years, the market really shifted away from the standalone policies into asset-based long-term care insurance. So asset-based long-term care insurance, you still have your long-term care benefits, which can be used in all settings, home care, assisted living, room and board in the nursing home. But underlying your long-term care benefits is a cash value, a policy that if you don't need care, you receive all your money back to your estate at your death. So essentially it's a return of premium, fixed cost, long-term care plan. Your rates can't change. If you don't need long-term care, all your money comes back to your beneficiaries. If you do need long-term care, you have the benefits that you purchased. So,
And I love that. You can transfer the risk, understand that you transfer the risk, but if you die before using it, the money is not, repeat, is not, that's NOT, going to go poof with these asset backed policies,
Right.
which I love. So,
And
what
now in
else?
the asset-based space, Dan, we have two types as well.
Okay.
So we
What's
have,
that other type?
well, we have the life insurance asset-based policy, and we have the long-term care annuity
There you go.
asset-based policy. So there's two avenues in the asset-based arena where we can get long-term care benefits.
And let me interject right here. A long term care annuity is a health insurance product. It is not a life insurance product in most cases, which is the reason we refer to Jack because A, he's an expert, but there's only one life insurance type. And let me just talk about it right here because at the bad chicken dinner, expensive Ruth Chris, love Ruth Chris, steakhouse dinner you're going to go to, they're going to talk about an index annuity with an alleged supposed long-term care benefit, which it is not. I call those policies when you get sicker, you get your money back quicker. They're guaranteed issue, but never, ever, ever replace long-term care, real long-term care, the type Jack's talking about, with an index annuity with some rider on it. Just please don't do that. And if someone's asking you to do that, it's financial malpractice. So keep going.
Okay. So, yeah, so within the asset-based space, what my clients like about it is they get their money back if they don't need it, but if they do need it, inflation adjusted long-term care benefits and, you know, available for an entire lifetime if that's the way you want to design your plan. So, it's up to our clients how we design the plan, how much per month they want to buy, and for how long, how many years they want the coverage for. So the policies are customized. It's not cookie
Love it.
cutter. It's not you only get 3 years or you only get 5,000 a month. I mean, you have your pencil, you have your piece of paper, can write anything you want for your benefits. Dial it up, dial it down, whatever you feel you need to suit your objectives for your plan of care.
And then
So,
you go objectively shop for the best specific deal for the customized plan that your clients want. It's really
absolutely.
that simple.
Yeah,
Um,
not complicated.
it isn't because you're doing it and you're the best, but if you go if you go to ltcpartner.com and you can schedule a call with Jack, he's going to ask you questions. He's not trying to sell you, and he's going to ask you questions on exactly what type of coverage you or you and your spouse or partner need. And then he's going to fill that blank. And he's also going to tell you if you're dreaming. and what if the policy or whatever you're thinking doesn't exist, but he'll get as close to it as he can. So with with that foundational product knowledge in place, with those three types of long-term care, let's do a swan dive into the new one.
What I'm excited about with the new one is, I mean, so for years I've had clients kind of like two different options and they can't decide. I have clients that, well, they want lifetime unlimited benefits. That's what they want. They don't want 3, 4, 5, 6 years of coverage. They want forever. And I agree with that.
Right.
Alzheimer's, dementia, we can need care for a long time. We don't
Yep.
know. But a lot of my clients also like the idea of a cash indemnity option. They like that too. They like the fact that, well, maybe I don't want to have to submit receipts. What if we can stay at home and my daughter can take care of me or my wife can take care of me? I mean, we'd like to have the best of both worlds. So, yeah, what's coming out next week? The best of both worlds. Now, they're not going to make the entire lifetime benefit cash indemnity. As I understand it, it might be for 33 months, close to 3 years of cash benefits, but it's pretty good if you then still have the unlimited model, with that, where a lot of my clients, they start off at home, but eventually they transition, right? You start off at home, you might need a little bit of care. eventually it becomes too difficult for the family and we transition into assisted living, God
Hmm.
forbid the nursing home. So the
Sure.
policy can be a perfect fit for lifetime coverage, but 3 years of benefits at home to start, really, really, really good mix of a plan. So I'm excited for it that this underwriter is finally making its policy more flexible with the lifetime benefit period.
And again, just the date, if you're watching this, depending on when you're watching this podcast, it's third week of October 2024 is what he's talking about. So if this comes out in November, it's already out. You need to get on the phone with Jack and check it out. But he's still going to listen to you and match you up with the policy or type of strategy. Now there's four primary ones that best fit your needs. In your opinion, Jack, having been doing this and really the top person out here, in my opinion, for long-term care strategies and insights, other than pure capitalism and them trying to corner the market, what was the impetus for this to happen, and how long did it take for them to figure it out, this new strategy?
Well, I
The
mean, it's
carrier.
just the marketplace. It took this company 4 years. I mean, they've always had unlimited benefits. They just didn't want to go the cash indemnity route. They just think, wait, that's just too much risk. So they're moving into the cash indemnity space just to make their policy more flexible to compete with other underwriters
Mm-hmm.
who have moved in this direction. So the arena is getting stronger, better, more flexible, which helps all companies. I mean, other companies will then pivot and what I'm
Absolutely.
hoping for is maybe another underwriter comes out with lifetime coverage. Because a lot of underwriters only will sell you 5, 6 years of benefits, and that's it.
Got it.
So,
Yeah,
so we
no, you're
kind of
right.
need the underwriters that only want to sell 6 years. We need them to go longer. And again, the company that sells unlimited benefits, we need them to give cash, right? We need everybody to kind of become better. And there's great products out there now. So it's a good marketplace. You know,
Well, and I have no political party. I am the lead party spokesman for capitalism. And this is a great example of that. I mean, with 13 to 14,000 baby boomers hitting 65 every day, there's an appetite and demographic tidal wave I always talk about that's driving these types of policies. And as people go into chapter two of their lives, this is one of the boxes they want to check going forward. So I think it's exciting, and I'm glad that we're seeing some movement. And I think after Obamacare, I think there was a little bit of a frozen nature within the business to see how that all played out, my opinion. And now I think the dust has settled a little bit to where companies feel comfortable to introducing these types of new products. For the person out there, Jack, that always says, well, that sounds too good to be true, there's not a product you can have your cake and eat it too. What's your argument against that statement with this new product?
I would say they're correct. You can't have your cake and eat it too. It is insurance. There's a cost to it.
Got it.
It's called opportunity cost. So if I have a client, let's say a 55-year-old couple, and they write a check for $200,000, and they may have a death benefit of 270,000 if they don't need care.
Mm-hmm.
But if they need care at age 85, they're going to have $2 million of coverage. So 200,000 turns into 2 million, right? If you don't use it, you get 270 back, but that doesn't mean that it's a free lunch. There's still a cost,
Well
because if I
put.
take $200,000 and I
Yeah.
try to invest it for 30 years,
Yeah.
I think I'm going to have more than 270, right? I might have 550 or 600.
Sure.
So there's a cost. If you want 2 million tax free, there's going to be an opportunity cost on your money to reposition. So, I mean, people like to say that it's too good to be true. And I get it. I mean, I like it. It's a great idea. It's great leverage to get 10-to-1 leverage, right? It's great leverage, but there is a cost. it's opportunity cost on our capital.
Yeah.
So we have to accept that with insurance, right? You want to turn
Correct.
200 into 2 million
Well,
of insurance,
but we both have old crusty curmudgeons in the business. We both try to head that feeling off at the pass with facts, which is what you just did. It's not too good to be true. You can have your cake and eat it too. There is not a catch. There's just facts, which he just laid out. So this new product is the chassis underlying the product life insurance.
it is. It's life insurance.
Okay.
So there's underwriting. There's underwriting. Um, but it's fair underwriting. You don't have to be Superman and Superwoman to get the policy. You just have to be in reasonably good health to get a long-term care plan. So we do have to go through underwriting standards.
And Jack will, what the feedback I've gotten from the people I've referred to him, which is tons, the people call me back and said he was so honest about the underwriting, whether that's good or bad. I mean, you're going to have to tell him exactly what's going on with you, but he is going to be super straightforward and transparent during that process because he doesn't want to waste your time or his, to be very honest. And I think people that are looking for these transfer risk solutions, like long-term care, and when they come to us, they just want the truth. They want the brutal facts. Here's the good, here's the bad, here's the limitations, here's the benefits, here's how long the process is going to take, etc. But the great part about Jack, they take the lead on all of that. He has great relationships with these companies and the internal people that do the underwriting. So the process goes smoother than anything I've ever seen for that type of business where you have to go through underwriting. Give us some insight, Jack, on your decades in the business, on just your relationships, without mentioning any names or carriers, on how you work through that with clients and the communication you provide during that process.
Well, I mean, so, I work with about 10 to 12 companies, right? So,
Which is pretty much the universe,
yeah,
right?
that's the whole universe of long-term care. I have a personal underwriter due to the volume that I do with
Sure.
each company. So, I work hand in hand with personal underwriters where they're on my speed dial. So if a client calls me up and we review their health history, I will call each underwriter that will be of interest to my client. And within 30 minutes, I should know yes or no from every company. Can we submit? Can we not submit? Most agents, it could take them a week to 10 days to get back to, right? To get back to, clients with the answers. I'll know in 30 minutes. So,
And not many people, for the people watching and listening to us, thank you. Again, this is Jack Lenenberg. He's at www.ltcpartner, Partner, LTCpartner, no spaces.com. He is the best. And the reason I wanted to point that out, what we just talked about, is there's not many people. I probably could count them on my hand, and I'm guessing, that have these type of red phone connections internally with these carriers. In essence, what Jack says, with every one of his carriers, he does so much business, there's a specific person that actually is assigned to him, and I call it a red phone, to where he calls them and they answer. And that's unmatched. And this is his specialty. What I love about what Jack does is, what we do. We're annuities. I'm Stan the Annuity Man. It's the Annuity Man. He's LTC partner. He does long-term care, and he does it at a very high level, and he does it very well, and he knows it inside and out. And there's a lot of agents and advisors that try to sell you mutual funds, sell you stocks, sell you a little bit of long-term care, sell you a little bit of annuities, and they're not a master of anything. They know a little bit about everything, but don't know a lot about the one product. I like the fact that he is in his lane, and he's based outside of Atlanta, Georgia. Even though
in
he
50
does,
states, though.
But all 50, he's just like us, licensed in all 50 states, which is the reason we love working with him. What else about that product that, or have you fully covered it? Um, what else do you see coming down the pike that you can make a calculated guesstimate on other than competition coming and adding to this?
Well, there's another, and this might be an option for maybe some of your clients, Dan.
Mm-hmm.
There's so for people who own non-qualified deferred annuities.
So let's stop right there. So a non-qualified deferred annuity, just going to go through the major ones, okay? That would be a multi-year guarantee annuity, non-qualified, non-IRA, a fixed index annuity, non-qualified, non-IRA, a variable annuity, non-qualified, non-IRA. Those would be the primary ones that he's talking about. Go.
So I'm sure there's a lot of consumers out there that own annuities that they've been sitting on for 10, 15, 20, 25, 30 years with significant gains inside the annuities, right? You know, people could have,
They're not opening the statements. That's why
right,
they just
you
throw the
know,
statements in the file cabinet. Yes, those
right,
are
they
the people.
deposited 75,000, 25, 30 years ago. They have 400, 500,000. That's just grown. So
And
they're
they don't want
sitting
to pay
on,
taxes on it. It's just
right, sitting
exactly.
on this huge gain of taxes and they just don't know what to do.
So what do we do, Jack Lenenberg?
Well, so Pension Protection Act, right, of 2006, which was signed into law in 2010,
Mm-hmm.
introduced changes to the tax treatment of annuities with long-term care benefits. So annuities can pay for long-term care tax-free.
Mm-hmm.
So tax planning strategy, I have an underwriter that will instant approval, no underwriting. If people want to transfer a non-qualified annuity into a long-term care annuity, for the tax play, right? So no, really, there's three
It's a
health questions.
non-taxable event. It's a non-taxable
It,
event. Yes.
but if you need care, all the gains come out tax-free.
Okay.
So
So
for
let's
people
stop.
sitting on gains,
Yeah. Let's stop and let's dissect this slowly. So you have a non-IRA, we call it non-qualified, but it's non-IRA money. You have a deferred annuity, a variable, an indexed, or a multi-year guarantee annuity. In that non-qualified account, you have massive gains. You can transfer that, and I believe that falls, Jack, under the 1035 transfer rule, which is a non-taxable event, or it is a non-taxable event, meaning that it's going to go from one carrier to another. It's not going to trigger any taxes. Let me say it one more time. It is not going to trigger any taxes when you do this transfer. But when you transfer it to the long-term care strategy that you and Jack would have talked about, then the money coming out, it's going to come out tax free. Those gains that you're so worried about, it's going to come out tax free, and you get the long term care coverage. Jack, fill in the blanks, whatever I missed there.
that's it. So for individuals sitting on gains, you can turn it into tax-free money for long-term care. And there's essentially no underwriting for if this is all you want to do is a tax play and have tax-free long-term care benefits and eliminate your gains. The only questions this underwriter is asking is, have you been diagnosed with Alzheimer's, dementia, Parkinson's, or do you use mechanical devices? That's it.
Mechanical devices meaning?
Wheelchair, walker, a hospital bed, dialysis machine.
Got it.
Basically, outside of that, you could have current cancer, you could have heart disease, you can have obesity, fibromyalgia, type 2 diabetes with insulin, all of this other stuff, and be approved. So you could even be on disability and be approved. So they're doing no underwriting if all you want to do is move your money. Now, if you want to do a little bit more than moving your money, so let's say you're sitting on a $500,000 with 100,000 basis, and all you want to do is make this 400,000 tax free. Basically, instant approval. If you want to move the 500,000 and turn it into 1.5 million, get a tripling your money with an extension of benefits rider for long-term care. Now we got to go through underwriting. Make
Now,
sense?
yeah, it does. So let's take that example. You have a $100,000 cost basis. It's grown to 500,000. You like the sound of this. You go to Jack. Jack explains it to you. You transfer it. 2 years later, you die. Now what? What happens to those gains and you haven't utilized
You
them?
haven't used care. I mean, then of course the gains are taxed at ordinary income. I mean,
Okay.
it's tax free if you use care,
Got
right?
it. And
It's
that's
you.
so what you're doing is you're saying we really need care. We have this asset that has all these gains in it. Let's utilize that. And if we draw it all down, we're not going to pay any taxes on those gains. And if we die, whatever we didn't use from those gains would be taxable. But if you want to make it totally tax free, then you go to the life insurance chassis, etc. Correct? You can go to the secondary. You can transfer because you can transfer and a new. Can you transfer this to a life insurance chassis or not?
Well, you would have to distribute the annuity into a life insurance
Got it.
policy, and the distribution is going to be taxable. So the insurance companies would tax you over 10 years, so that's
And you
we
walk people through that. But I just
right.
think it's for a lot of people out there that watch this podcast and listen to my videos and stuff. It's just one more thing that you need to put in the back of your head, knowing that you have a fantastic resource in Jack, again, ltcpartner.com, that you can run the idea by and see if it makes sense to you um, to do this type of transfer and do this type of what I call transferring risk. So, annuities are transfer of risk products. So is long-term care. But this is just one more way of doing something legal that doesn't trigger any taxes on the transfer. It's a perfect, in my opinion, food for thought moment for those people that have those type of annuities with gains.
Sure.
And again, MIGAs, multi-year guarantee annuities, which are the annuity version of a CD, fixed index annuities, which is a CD product, and variable annuities. Those are the three primary deferred annuities, and they have to be in a non-IRA account. If you fall into that category and have those gains, then that's when you need to reach out to Jack. I did want to point out one thing, Jack, that I told everybody you're based right outside of Atlanta, but there's a lot of people out there, Jack, that's scratching their heads with all of the Steeler and Pittsburgh thing behind there. That's where Jack's from. So, he's an Iron City beer guy. He's a Pittsburgh Steelers guy. He's a Pittsburgh Penguins guy. He's a Pitt Panthers guy. He's that guy. He's a Pittsburgh Pirates guy, even though somehow he took a wrong turn and ended up in Atlanta or outside of Atlanta.
The Rust Belt moved south, Stan.
I mean, he's bronze. He's in Atlanta. He's getting the. No, I have to kid Jack about that because he is a Pittsburgh person for sure. So, what else is new, Jack, to fill all these people in about long-term care?
I mean, pricing is great right now. Couple of underwriters reduced rates by about 20 to 25%. So rates, the cost of insurance is as good as we've ever seen it. And it's really due to the rising interest rate environment, which I'm sure in your business has, created a queue all the way,
Our business,
to Europe.
people always ask, did interest rates affect your business and all that stuff? if I look back, and my consultants do this all the time, they'll show me the 10-year and the 5-year and the 7-year numbers. Like I really don't, I care, but it doesn't drive the train for me. I just think, just just like you, with so many people hitting age 65, 13, 14,000 a day, and so many people that are needing to transfer risk and set up these types of policies for them or their spouse or their partner. I don't think rates drive a lot. If you are doing what we do and what you do, which is licensed in all 50 states, represent pretty much every carrier out there,
Always
and
busy,
we're always busy.
always
So
busy,
rates,
regardless of the environment.
I
Right.
don't care. I'm like, we're like you. The Fed announces and we're like, whatever. I mean, people
Right.
still need income. People still need legacy.
That's right.
People still need long-term care, regardless of who's president, regardless of the Fed. And I tell people all the time, forget parties, prepare for both. Take care of the boxes you need to check for you and your family, and go live your life.
That's
Go
accurate.
live it.
Right.
Someone told me the other day, you got to manage your stress. And I said, no, no, let's not manage it. Let's eliminate it. Okay. Let's try to eliminate stress. The products that Jack and I do are stress elimination products. They're transfer of risk products. You know what you're going to get. There's no floating variable out there. We both sell guarantees. With that being said, Jack, what's some closing comments, if you have any, for the fine people watching this and listening to this podcast?
I mean, I would just say, Stan, regardless of insurance and products, when it comes to long-term care planning, the most important thing for our clients, have the conversations with your family, with your loved ones, with your children. Bring your children in
Mm-hmm.
and just discuss what your plan is, whether it revolves around insurance or not, how you want to be taken care of. Make sure that your directives are up to date. Make sure that you've updated your will, your power of attorneys
Mm-hmm.
documents
Mm-hmm.
are completed. If you end up needing care, these documents and your directives are so important, and a lot of people don't really think about what needs to be done ahead of time,
Mm-hmm.
and it's tough to try to do everything at the last second. So, just the conversations with the children, let them know what you have, what your plan is. If you own a policy, let your kids know that you own a policy, what your benefits are. Don't keep it secret.
Right.
Bring everybody in. Everybody's on the same team in the family. And, it's the discussions and the conversations that's really the most important
And and
when we're
I
planning.
agree with that
So,
totally. Yeah, and always tell people, think about putting a team together as you go into chapter 2 of your life. Jack's part of your team. I'm part of your team. Your CPA, your estate planning lawyer, your tax lawyer they're part of your team, financial team. And of course, you have a medical team, but you have a team, and you have a team of experts that is going to shoot it straight, and that you can run things by and have open conversations. I think that is key. Once again, every time I talk to Jack, it is fantastic. And, I fully sign off and stamp you working with him and kicking the tires. He has a great site. Once again, it's www.ltcpartner.com, ltcpartner.com. Go there, schedule a call. He is not a hammer looking for a nail. He's like us. He's listening. He uses his ears and his mouth in proportion. And he's going, if he can find a fit, then he's going to shop all carriers for the best contractual guarantee. I'd like to thank everybody for joining us for this episode of Fun with Annuities. Thank you, Jack Lenenberg, and we'll see everybody again next time.